Jared Lenner, Dave Serwitz, welcome to Acquiring Minds.
Thank you, sir. Good to be here.
No, thank you for having us, Will.
I saw the two of you on stage at the CETA, Southeastern ETA conference at UVA a few weeks ago. And I said to myself, man, I got to get these guys on the pod. Lucky me, you said yes. So in addition to being a great story with lots to learn, Dave, you are the seller of the business that is the subject of today's interview. And we in this world talk about you sellers constantly, but we rarely hear from sellers directly. So it's super helpful and fascinating to get a first-person seller's account of a search story. Let's dive in, guys. Jared, why don't you kick us off with some background on yourself?
Yeah, thanks, Will. And thanks again for having us. Born and raised down here in South Florida. I did my undergrad in econ and political science, which we'll come back to kind of later in the show at U Chicago. Spent the early part of my career on a trading floor, so definitely not a typical search background, although I'm not exactly sure what typical is or if there is typical, right? And I was actually out riding my bike training for an Ironman, and I got hit by a car. And that was really the start of, do I want to live in New York forever? Will my then girlfriend, now wife, like me in 5 years? When we have kids, God willing, someday am I going to see them grow up? Do I want to live in Manhattan forever? It's a great place, but those are not good no's. Redid everything about my life over some time, but that was the moment in time. I looked up, said thank you to God that I'm still here. Decided to go back to business school. Took a couple years to get there.
Jared, how bad was this accident?
It wasn't great, but I'm here. I walked away, mostly unscathed. Broke my hand and wrist in 3 places, and a bunch of other stuff. But look, like I said, Will, I'm really grateful to still be here, honestly.
Sure.
And
Sure.
I try to bring that to work and into my life every day. Went to business school, the University of Virginia. Spent some time working for a private equity-backed company that repairs power lines. And, while I was in business school, I kind of looked around and, I grew up playing hockey, and then I worked on a trading floor. I looked around and said, gosh, like the corporate environment just isn't for me.
Let's do you next, Dave, and then we'll keep going back and forth between you. So tell us a little bit about your background, Dave, and the business and that Jared now is the running.
We're a tutoring company. I think, as Jared says, I think we are the largest in-person tutoring agency in the country. But anyway, I was never a great student myself. And when I got to college, I was looking for a tutor, and it was like a frustrating, difficult process. And took me a lot longer than I feel like it should have. And this is a long time ago. And just through my frustrations and getting it all arranged for myself, I did a lot of legwork, and I was sitting there with my tutor after the first couple sessions. And I was like, man, do you know how hard it was for me to find you? And he's like, really? Because like me and all my friends that, tutor math, we're always looking for more students. And I'm like, all right, here's what you got to do. And I started like drawing out of like things that he should do. And he kind of looked at me sideways. And so I'm like, okay, I'm just going to do this myself. So that's basically how we got going. It was quite a while ago. But
when was that? When was that, Dave? When did you found the business?
2002. That was
2002.
Yeah. So it's a very long time ago.
And the business is called what?
Grade Potential Tutoring. We were originally called Make the Grade, and I had like a trademark. We weren't able to trademark it, and so that's when we ended up changing the name. Basically,
okay.
That's the deal.
Make the Grade became Grade Potential.
Correct. Yep.
And which is what it goes by today.
Mm-hmm.
Great, Dave. And so tell us about the business that you founded and what it does exactly.
Yeah. So we are an in-person tutoring company, and so I founded it quite a long time ago, 2002, as we got going. And, we now service, 40 plus states, et cetera, doing in-person tutoring.
Fantastic. Great. Okay. Well, let's continue in parallel here a minute before the two of your life stories converge. Back to you, Jared. You're at Darden. I assume that's where you hear about search. Tell us about your journey into search.
Yeah, definitely. Thanks, Will. I think a lot of people nowadays come to business school and they say, I'm searching for sure. I was not in that camp. I showed up. I had no idea what a search fund was. I knew that working on a trading floor, like I said, was not what I wanted to do in my life. I knew that I, wanted to reorder and change a lot of things about my life, specifically on the professional side of things. And I'll never forget, it's a funny story. And Timothy Bovard from Search Fund Accelerator came and he gave a pitch on what is a search fund. And I'm sitting there and he explains it, and I just get more and more excited about it. And I go home and I talk to my then fiance, now wife, and say, hey, Renee, I think this sounds really interesting. It sounds really compelling. It feels a little insane, but I think this is what I want to do. And I guess my first piece of unsolicited advice for listeners is having a supportive significant other, if you have a significant other, is super important, because this is a really long, hard journey. And she was supportive from, I wouldn't even call it day one, day negative 100 or negative 300.
Jared, what were you looking for? What itch did you have to scratch, or maybe another thing? What were you trying to get away from in corporate land?
Yeah, I think, look, I've always had a little bit of sharper elbows. Like I said, I played hockey. I worked on a trading floor. I knew I wanted to bet on myself. That's, why I left a pretty good job. Pretty great job. And ultimately, I wanted to be the captain of my own ship and really, try and, like I said, bet on myself. Will, I think that's probably a pretty common story you hear.
And so Tim from Search Fund Accelerator, SFA, presents at Darden. You love the model. Fast forwarding here a little bit, you are an SFA searcher, so you did go with Tim and his team. There are other ways of doing this. Did you go with SFA because it was right there in front of you, or tell us a little bit about the decision to do that? Because that is a key decision point in a searcher's journey. Yeah,
it's a huge decision point. And, I'll back up. Like I originally, the first time I met Tim, he presents, he says, well, what's the downside of searching with SFA? And he says, there is no downside. And I said, well, this guy's totally full of it. There's a downside to everything in life. And then I got to know Tim, and he really is who he says he is. He walks the walk. And I think it's really important you believe that if you want to search with Search Fund Accelerator or any of the accelerators that are out there. But I would actually split it into two decisions, right? Like decision one, do I want to take outside capital? And decision two, if I do, who do I want to take it from, right? And so for me, I looked around and said, well, this is already really risky. The Stanford study I know is, traditional focused, but the statistics are what they are. And, the idea of a personal guarantee was really scary to me, to be totally honest. I mean, I think it's unbelievable the bravery some people have signing a PG with an SBA loan. So I knew that I wanted to take money, at least my first go round for this. I think that led me to the second decision, was who do I want to take it from? And, I looked at the traditional model and the accelerated model. I met with, great firms in both camps. And ultimately, like I said, I came from a trading floor, and I started to think about incentive alignment. And, if you look at the traditional model, right, they're backing 30, 40 people a year. And portfolio theory says there's two ways that you can improve your risk-adjusted returns. You can increase the number of uncorrelated assets, aka invest in 30, 40 searchers a year, or you can increase the quality of your assets. And as the asset, right, as the searcher, it was very clear to me that the incentive alignment with SFA is, second to none. They bet on they invest in 5 searchers a year, and they have to get them all right. Right. And so to me, that was what pushed me over the line. Obviously, I got to know, Tim Bovard and Matt Parker, who's the lead partner on my deal, or our deal, I should say, Dave, and Sean and Sean O'Neill, and the entire team is awesome. But, to me, the incentive alignment was night and day better from my personal point of view. Does that make sense, Will? Is that helpful?
Yeah, no, that's a really interesting perspective. So traditional searchers invest, have a more of a portfolio approach. They invest in many more deals, and with the idea that some are not going to go well and some are going to be do great, and it'll shake out in a really good way. But from you, the one receiving that capital, you want them to be a little bit, have more incentive for your particular deal to go well. And so because SFA is doing just 5 a year, they're not going to let one sink, because that's 20% of their portfolio, or their deployment that year. There is also, isn't there a lot more involvement by the SFA team with the searchers? I don't know that. So tell us about what kind of additional services, if you will, are on offer.
Yeah, that's absolutely right, Will. Right. So SFA has two offices, one in New Orleans, one in Denver. I moved to New Orleans. It was awesome. I joke it's my 2-year study abroad. I rode a Mardi Gras float. It was
Working
amazing.
hard, huh, Jared?
Working really hard. No, but look, jokes aside, Will, I think the in-person meeting, the in-person relationship that you build with your investors, right? Like, you're not afraid to ask what might be perceived as a dumb question because you know these people, right? Like, I lived right next door to the new house that, Tim was building at the time, right? And so, I know these people really well. The level of support you get is second to none. Their weekly check-ins. How's your search going? How can we help? What are you thinking about? What are you looking at? Help you build those reps, build that pattern recognition faster. I was sending emails 8 days after I started my search, right? Mm-hmm. And I had my first seller calls within 2 weeks, right? I think that,
and you attribute a lot of that to the it's an accelerator. So the whole process accelerates, I guess.
Absolutely, right? I mean, you don't have to reinvent the wheel, right? Like, I mean, the silliest example, like, you don't have to go buy a printer. There's a printer, right? You don't have to figure out the tech stack. You don't, and, I think at the end of the day, it's easy to look at the search and forget that it's, buying a company is the starting line, Will, right? I mean, I know people say that all the time, but to me, the support through this one-time process of searching, right? And then post-close, right? Like, SFA sits on my board like any traditional investor. Dave is in every single board meeting as well. I'm sure we'll talk about that. I have, by choice, I have a weekly call with Matt at SFA, and we talk about the company. We talk about the challenges that we're facing and the opportunities. And, the support is unparalleled. Well, I mean, I have friends that have run traditional searches and that, some of them bought great companies and they're having a great time, but the experience is night and day different.
And the economics for you, Jared, are similar to traditional search fund economics, right? So you've contrasted accelerator with traditional search investor model, but in fact, on the economics, it's quite similar.
Yes,
right?
That's correct.
Dave, back to you. So 2002, you said you founded the business.
Yep.
And when and why do you start to think about selling, or had you thought about selling? You get an email from Jared, and that's what prompts the thought.
I mean, I didn't think about selling for quite a long time. I know maybe in traditional business school, you're taught to think about the exit from day one. But I, never did. I'm super thankful that, I've had a lot of experience within my immediate and extended family of running businesses and such. And so, and pretty much everyone in my family, ran a business for 20, 30 years. So it was not like how are we going to figure out how to sell this business? That was I don't think I ever heard that once growing up. But anyway, so, I mean, the reason I chose to do this was at some point, probably around, I think maybe 2017 or 18, I just started to become a bit less excited and engaged in what I was doing just because I had been doing it for so long. I did start another business around that time, and I started focusing more of my efforts and my day on the other business. And I just been working on the same problems for so long that I decided I was ready to work on new problems. And so, I knew it wasn't going to be short, a short process to sell. And I wasn't sure, honestly, what I wanted at that time, or, what a good experience meant to me. But anyways, we started, getting our books in order and starting to kind of be on the horizon. And I don't know if you want to get into it now or not, but I did have some searchers reach out to me around that time. But anyway, yeah, that's basically when I started to think about it as something that I was, going to be doing as I just started focusing less on this company. Then of course COVID hit, and it was like, oh crap, and so I had to kind of refocus some efforts here to make sure we didn't go down the tubes. But thankfully we came out even better and stronger, which is super awesome.
Yeah. I mean, COVID would have been a boon for this business, no?
Well, On whatever that mid-March was, when it was like, okay, this is a real thing.
So Tom Hanks got sick and then the world fell apart, right?
Yeah. So we dropped off 85% in one day. So that was very scary. And maybe around that time or a few days before that, when it was like, okay, like everybody, like we're gonna probably, I think we decided we were gonna send everybody to work from home before it was like mandated. I'm not sure if that was a nationwide or just California or however it went. But anyway, so we started, maybe we were like 40 or 50 people at that time. I'm not sure. And so we started like sending like 6 or 7 people home a day and like trying to get them set up. And like, there was a whole host of challenges with that. But in the beginning, I did not know if it was going to be a boon. I mean, we have tutors in person going to people's homes and people were not thrilled about that. Right. So we literally, I mean, our lead flow literally dropped off 85% in one day. So that was crazy. I mean, sadly, lots of furloughs and, all that kind of stuff. And in many ways, it was a, I hate to say good experience, but like looking back, I mean, I cried all, 25 hours a day. I cried. But what was amazing was like the support that I had from our team members at the time. Not all of them, honestly. There were some that I expected support from that I did not get it, which was sad. But there was also lots of people that I got amazing support from that I also wasn't sure if that was going to happen either. So, anyways, in many ways, it was a great experience, but very difficult at the time.
Yeah, well, certainly doing in-person anything it was not the business to be in March 2020. But I guess the ultimate way COVID has impacted society and the way we do things, I just feel like things are more individualized than they were before. And so I would think that tutoring would be on the upswing, in-person one-on-one tutoring after the initial scare and the initial the lockdowns and so on.
We're going to get you on the phone selling, Will. We're going to get you on the phone selling because you're doing my job for me. But that's the hope, man. Yeah.
Okay.
Yeah.
All right.
Yep.
And so Dave, this was 2017-18 where you started feeling like maybe it was just time that this chapter was time to move on to another chapter. You'd start another business. You hear from other searchers. What can you say about that story in brief, and kind of tell us what your reaction was to like the first time you heard about what these quote unquote search people were doing?
The first one, I mean, I guess I'm being honest. I'm not sure if it was like the first one, but the first one that I took like a call with, I think actually I think it was in COVID. I think it was, I'm going to probably guess end of 2020 or something. I don't honestly remember. But I remember where I was and I wasn't in the office. So it had to be in COVID. And, it was like, hey, we're interested in buying your business. And like, even though I wasn't like ready, I was like, okay, let me get some reps in of like what these conversations feel like. Mm-hmm. Right.
And had you ever received emails like that, Dave, from private equity or anyone?
Yeah. But nothing too significant, or I guess I honestly don't exactly remember. I hadn't really like engaged with any of them. Or they felt, I don't want to like be disparaging, but like they felt like low level was the way they felt to me. So I didn't respond, but I don't know if that's true or not, but anyway,
but these guys felt more serious. This email,
I think it was just the timing, honestly. Timing. I don't know if I would have thought they were more serious or not. It was just like, I'm starting to like actually think about doing this. So let me use this as practice. I mean, that was my mentality at the time. So if it had been anybody else at that time that did not appear like, I don't even know how to describe what I felt as low level, but then I was like, okay, sure, I probably would have taken it just for the reps, if that kind of makes sense.
That's what we always hear, is that it just catching the seller right at the right time is kind of what it's all about.
Yeah. And like, it probably was even pre-right time, but like I've come to learn that I really like getting like down and dirty with the details. And so of like almost anything. And so I'm like, great, like I'm just gonna like try to like learn what the mentalities are and start to like, just get experience with this. That was my thinking. So anyway, they, we had a call, blah, blah. And I was looking at their website and like, I didn't know what Search Fund was at the time. And like, they were kind of explaining it to me. And, I personally don't like all of the, or I don't feel spoken to by like half of the Search Fund websites that are like carrying on your legacy, like buying one business to carry the torch. And like, I always like, oh dude, like whatever, that doesn't speak to me. I'm not saying it doesn't speak to others, you know what I mean? But anyway, so I was like, I remember being like, you guys spun up a website just for this? And he's like, yeah, dude, it's like $30 a year. I'm like, okay, I guess that's true. Like, I felt kind of stupid. You know what I mean? Because I'm like, you're making a whole website about like, I'm buying one business, you know? But whatever, you know. And
Dave, why doesn't that legacy carrying on the torch stuff resonate with you? Because you think it's phony, or it's just not that important to you, the legacy bit, or both?
Probably both. You know what I mean? Like,
it feels a little phony. It felt phony to you as a seller.
I'm very skeptical. You know what I mean? Yeah. I'm very skeptical. I consider myself like a salesperson at heart. So anyways, when I hear these things, like my immediate feeling is like rolling my eyes at like, you know, at like the sales pitch. But I mean, I'm not saying that's true for everybody, but that's the way I probably took it.
Sure.
Yeah.
Sure. Do you think there is like something that you were looking for, that there's something that would have resonated? Was it basically going to come down to how realistic it was that somebody actually could buy your business and for the right price?
I guess, I mean, at that time, like my thought process was not very flushed out, which is why I took the call. I'm like, let me see, let me start to get some, you know, experience with this. Right.
Great.
And so I guess,
what did you learn talking to these guys? What'd you feel? What'd you learn?
Oh, I don't feel like I learned I wasn't prepared. I mean, like, I don't think I didn't learn a ton about search or blah, 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 but like they were asking me like good questions that like, you know, that I didn't have like great answers for. And I don't mean that in like a salesy way of like, how am I going to spin this? I just mean like, oh, like if that's like, I can't remember, but I remember like leaving the call and they wanted a bunch of all this other like information. And I was like, oh, I don't know if I feel like comfortable like sending them all this information requests that they were asking for. Cause I realized during that call and with all the questions they were asking me that like, this is not going to work out in a way that I wanted to, because I didn't have like good, intelligent responses to all their questions. And so like, if they had to figure all of that out with me on the sidelines, it probably wouldn't work out the way I wanted to, you know what I mean? And so that was what I took from it, is like, okay, I'm for sure not actually ready to be doing this.
How interesting. I'm not sure I've actually heard that dynamic like talked about in our world, Jared, that like if you get a seller, one way that you can scare them off is by making them feel unprepared to provide you the information, or that just kind of like in some ways they're not selling, they don't want to continue the conversation with you because you've made them feel a certain way about their own lack of preparation.
But that kind of probably wasn't, like that's me being willing to have a call before I'm ready. That wasn't
true.
Like,
this is all your exercise and getting reps.
Yes,
that's right.
It was like
that's
in my mind, I'm like I didn't know what I was going to take from it, but like, well, this is what it was, and you know what I mean. And so, anyways, I'm not saying this is a normal dynamic. I don't know what you think, Jared.
Well, but it's also like there is certainly a exit planning process that people go through, and so that is actually a standard part of the process. Usually, there's even things called exit planners, and you were just learning that you were going to need to like put some preparation and planning into this exercise.
And I'll hop in for a second, Will, right? Like I also think Dave and I joke a lot of the time, like we think about problems from the opposite direction, right? So like, you know, Dave will think about, okay, like, you know, if we're spending marketing dollars, you know, like if we spend this and we get a CAC of that, you know, what does that mean about, you know, what we're able to get in return, right? And I think about, okay, well, like what is the total universe of people Googling tutoring near me this month, right? And so we think about problems from the opposite direction. And, you know, I think, Dave, I know one of the things I noticed through the sales process was like, I think those calls were probably really helpful for you in, you know, I don't want to say getting you ready for, you know, the ultimate exit process, but like helping you, who had always thought about the business in a certain way, think about it from the perspective of someone like myself, or, you know, a private equity firm, is like, I think you knew all the answers, but like you didn't really, you thought about it from a different perspective, or, you know, use different terminology or whatever it may be. Do you think that's a fair characterization, Dave?
Yeah, partly. And like, I also, you know, I have like no formal, or very little like formal business training. I don't even know what that means, but, and certainly on the financial side. So, you know, like, I mean, I like cheated in order to make it through my like 1 or 2 financial accounting classes and whatever. And so like my financial skills were not good. And, and so I kind of came up with all my own constructs very often that had like similarities, like typically we get paid before the tutors get paid, right? So I always called that like, a positive cash flow timing cycle. Like that's what I called it. You know what I'm saying? And like people in finance are like, oh, negative working capital. Like that's all like, and I'm like, oh, I don't even like, what do you know what I mean? And so I didn't have any like, I think one of my biggest challenges, which one of my good friends always told me, he's like, David, you just kind of operate in a vacuum. You weren't interacting with like smart, savvy people all the time, like blah, 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 outside of our organization. And so anyways, a big part of it was just, I had my own financial like paradigm and construct that I had created that worked for me, but it didn't fit well into like the mold of like somebody doing analysis and diligence, on the company.
Yeah. Dave, where are you based?
So we were in San Luis Obispo, California at the time, which is like there's a college, Cal Poly there, which is where I went. And at the time we had like a call center environment with like cubicles and blah blah. And so that I didn't think we could ever be anywhere else. And then we were forced to go home with COVID, and so that worked so well that about a year into it we just abandoned. I mean, we probably had like a couple $100,000 of like office crap, and I had to pay somebody to get rid of it. You know what I mean? So then we went fully remote, which was super awesome. I mean, there's pros and cons, but for us, I think the pros like super outweighed the cons, which we can get into if you want.
Great. Well, let's get back to Jared here. Jared, you mentioned the electrical line business of your previous employer, and I didn't realize that must have been where your first thesis came from, because I remember on stage you said that was the type of business you wanted to buy. Tell us about your initial thesis and how it evolved.
Yeah, so I worked for a company that built, repaired, and maintained power lines, and ultimately, I thought, well, I'm kind of know a little bit about this, and it's funny. What you think on the way into a search, right? Well, but I thought to myself, well, trimming trees around power lines, so extremely non-discretionary, and the utility company, they get a rate base, right? So like if they have $1 billion of assets out, which would be very small, but just for easy math, and they get to charge 10% based on the regulator, they get paid on their uptime, right? So extremely price insensitive customers, extremely non-discretionary. Seemed like a great company to buy. We can talk for a whole host of reasons about why I am not the right guy to run that company, and a whole host of other things. Utility vegetation management is I guess the search niche. But look, I think a lot of people, when they think about a search fund, they think about it backwards. They say, okay, what is a really good niche, and I'm going to outthink every searcher ever in the entire lower middle market private equity ecosystem for platforms or tuck-ins or bolt-ons, and I am going to think up a really great niche. And I think that is the wrong way to think about it, right? I'll spill the secret that would have saved me 12 months of searching, although I'm happy it didn't, because I'm really happy with the business I bought, obviously. But I would start with what you can bring to the table, right? You have to remember, you have to replace the smartest person at the company probably, and the heartbeat of the business. And Dave is really humble, right? But let's remember, there's survivor bias here. Like all of the Daves who aren't brilliant went out of business. He founded the business in 2002. They were out of business in 2003 or 2004. And those that were only kind of smart definitely went out of business in 2020 or 2021, right?
Yeah.
And so you got to remember, like, you are stepping into the heartbeat and the smartest person in the business. And that's not to say we don't have brilliant people at great potential. I mean, we have an awesome team, and I am incredibly grateful for the people that I guess I'll use the word inherited, although it feels a little strange. But, I would say start with what you can bring to a company. And for me, I spent, like I said, the first 6-7 years of my career on a trading floor. I spent some time building medium latency statistical arbitrage trading models. In addition to that, and I trade eyeballs on Google. I mean, I'm exaggerating a little bit, Will, right? But the searcher company fit is very clear. And I'll say SFA, I'll plug a little bit shamelessly, does a really, really good job of that. And they help coach you to that. I also want to caution people that it may not be what it sounds like or looks like from the start, right? Like, I sat on a trading floor and I bought a tutoring company. On the face of it, that doesn't make sense. And then you dig in the weeds and you realize, oh, like the trading model and the trading skills and understanding, like I said at the start, I was a quant econ poli-sci major at U Chicago, understanding, how a dynamic auction marketplace works in Google and other digital ad acquisition. It's been an unbelievable asset. And, I don't think you would have caught that at first blush. So I guess I'd say, like, definitely have a thesis, because it's a very bad way to raise money if you don't have one. Like, don't go out with a PPM without a thesis in it. But my advice would be willing to look at yourself 12 months into your search and say, gosh, like, am I really the guy that's going to be the right cultural and skills fit for a company that trims trees around power lines? And 9 months in, I looked at, it was shorter than that, but I looked at other kind of similar-ish stuff along the way and realized this just is not the right fit. And started looking at daycares. I emailed probably every daycare with more than 3 locations in the United States that didn't have Christ centered in the website, because I'm Jewish, and so that didn't feel like a very good fit. Mark Andrew.
Jared, yeah, Mark Andrew. His episode just aired on this podcast. The kind of the subtlety of the skills that you have and how they can apply into a business is a great point. You're not necessarily looking for an industry that you've already been in. You're looking for skills that you can transfer in, transferable skills. And those might be a little bit subtle to tease out. In the childcare example, what were the transferable skills there?
Yeah. Look, my dad was a school teacher for 20 plus years. My sister runs a daycare. I have multiple aunts who have been teachers for a really long time down here in Florida. And so, I know the space really well. I had tutored. And so I originally looked at tutoring, and I got so many emails back saying, there's no way you could afford me. I make, $100,000 bottom line. And I was like, okay, like, there's nothing big enough for me here in tutoring. And so, I pivoted to daycares, and Mark Andrew was so nice. He gave me some of his time, which was really, really kind and generous of him. And we talked about it. And, look, I think another thing, like, if you look at the math, Will, on how you get to 35% IRR, it's very different today than it was, 6 years ago, with very different debt and leverage environments. And, you can kind of look at it and you do the math, and you can trust me or do it yourself. But, to hit a 35 IRR, with an extra turn of debt and 4% cheaper debt 5-6 years ago, you're looking at a 10% growth rate, maybe 8. I felt good I could grow a boiler repair firm that fast. I didn't feel good I could grow, a lot of other stuff that fast. And daycares were really interesting because they're unit-based growth, right? You can add a 4th location and you've increased your revenue 33% if you, fill it. And so, it felt like a good fit for my family background. And, I hadn't quite landed on the skills fit. I knew ultimately that was really important at that point in my search. And, obviously really happy with the company we ended up buying.
But childcare, it was mentors. Mentors didn't make sense because you were talking to you. They get back to you and they were effectively one-person operations. Then you go to childcare, but you find your way back to mentoring broadly. How did that happen?
Tutoring, I think. Yeah.
Sorry, not mentoring. Tutoring.
No worries. I knew what you meant.
Yeah.
Yeah. Look, around that time, I had written off tutoring as a niche, and I think this just goes to show that luck is a huge part of this. And Dave had responded to, I think it was my 5th email, something like that. And I'm sure Dave will tell a funny story about that in a couple of minutes. But, David said, yeah, like, I fit in your size range. And I was like, okay, cool. We said, hey, I already hired a banker. Would you be interested to see the sim? And I'm like, oh God, like, for searchers, a lot of time that's the kiss of death, right? Well, it's like, oh, well, it's going to be a bank deal. And, this looks like a really attractive company. So I said, yeah, for sure, I'd love to see it. But, at that point, I had crossed my fingers and toes every single night for about 3 months until the sim came out. And, obviously all's well that ended well, but I bit my nails for a really long time.
And so what year are we now?
So this would have been December of 23. Help me out here, Dave. Is that right?
Probably about that.
Yeah, December of 20.
But yeah.
So I think
Dave, so post-COVID, Dave, you had returned to the idea of selling, and this time you were proactive. You had hired a banker
it was
to
like,
do a process.
During COVID, it was like, are we going to make it? You know what I mean? For the first few months, and then thankfully, like, yes. And then like, I feel kind of lucky that families were like canceling the appointments with their tutoring before they were canceling the billing with us. You know what I mean? So I got a little extra coasting room there, which was nice. But anyway, yeah, so I mean, that was like 2020 or whatever. Okay. And then like 2021, we did like pretty good. And maybe 2022-ish time also. And, then I was, I had a whole nother search experience, which if you want, I can go into, but when that didn't work out, I'm like, okay, and by the way, like if that had even progressed to the next step of the quality of earnings and all that, like it for sure wouldn't have worked out because we have like, to me, like there are some parts of our books and such that are like relatively complicated. And I did not have a paradigm to explain them other than like, how I always thought about them, which was not GAAP and blah, blah. And so I then got introduced by like a couple mutual friends to like, a investment bank that specialized in education. And as I said at the CETA thing, like I generally am skeptical about these type of like professionals, but they like came highly recommended and I liked them and I realized I for sure was a bit out of my league. And so they ended up being like super beneficial, helped me a ton, especially on the financial side, because that's I don't want to say like particular weakness, but it certainly is not like an area of strength or expertise. And so they really helped me there. And so, yes, it was a big benefit for me, including, they encouraged me to spend like quite a bit of money to like do a quality of earnings on our own selves, like ahead of time and come up with a paradigm on how to explain things, because at face value, there were a lot of unattractive things that if you didn't understand the nuance, I just had like a gut understanding of the nuances, but I did not have like a spreadsheet way to describe them. And so they helped me do that. And, it worked out good. But like the first few people I talked to when I did not have that, kind of like ran away screaming. And I tried to explain to them why they're wrong, but they didn't believe me.
I was saying, and you hired CDS, right? Like a firm that everyone has heard of.
Really? Okay.
Yeah, they did great work and, really helped to put into numbers that someone like myself could understand, exactly what we were looking at, and seeing like a professional accounting firm having written those was really helpful for me in building my understanding, and then obviously subsequently getting SFA on board.
Yeah.
Mm-hmm. Well, we're going to unpack the business and deal itself here in a minute. But Dave, you glossed over the fact that there was another interaction you had with searchers that didn't go anywhere. Anything to say about that, or is that a side story?
I mean, I'll give you the high level. So, I had like maybe put together like my understanding of like books and like cleaned up a bunch of you got to understand like my chart of accounts, like in QuickBooks, like I probably made that like a few years in, and I don't want to say it was horrible, but like it was just like, that was, I put it together. So I had I was putting everything in like, almost like accounts receivable. So I had like negative millions of dollars of accounts receivable, anyway. And so, it didn't really make sense, but it made sense to me, and I wasn't trying to sell the business. I was just trying to run it. So if it made sense to me, I was fine, Yeah. But anyway.
And by the way, Dave, like every seller that we hear about and talk about on this podcast, it's the same thing. So
okay, cool.
Your most founder owners run their ships the same way that you are. So you're not alone. Yeah.
Cool. So anyway, so I had these searchers reach out to me, and this time I was like ready for another, did I think it was going to go anywhere? I'm not sure. I was like, great, I'll take another at bat to like learn and we'll see how it goes. But anyways, I really liked them. Like they really impressed me. Their financial skills, like maybe similar to Jared, were like really, really good. I was like very impressed with their like wizardry, like on the fly. on Zooms, but it also made me nervous because I'm like, crap, like I won't be able to like validate this or not. You know, I didn't have the skills to do that. So, but anyways, I really liked them, and we even signed an LOI, and yeah, after like I don't know how long, a while. And I would have been happy with the deal if it had worked out, but for sure the deal would not have worked out if they had done the quality of earnings, you know? And so I don't want to say it kind of almost like saved us a little bit there, but, yeah, basically what happened is
why didn't the deal work out?
Yeah. So maybe I'm assuming they're more on the traditional side where they had like, you know, 20 investors that were going to kick in $1 million each or something like that. Right. And, before, you know, even though we negotiated the LOI, which to me, like as I've come to learn, like, oh, like you generally have 3 LOIs for every deal closed. Like that hurts my heart. To me, it was so serious. Like from my side of like I don't say integrity. Like I'm trying to say I have like all this integrity, but like I don't typically operate like, let me actually sign something and see how it goes. Like to me, it wasn't a flippant letter of intent, like a letter of like possible intent. This was like, we're fucking doing this. Yeah. Like, and this is the outline in which we're doing it. Like, that's the way I saw it. And so,
did it fall apart on their end or on your end?
So basically,
who pulled out?
Then they came back to me and they're like, hey, Dave, we're only able to get like, you know, half of our investors to go into this. And so I'm super sorry, but like, we can't do it. Like they had already introed me to the Q of E people that were going to do it, which again, it would have for sure fallen apart at that point. You know what I mean? But anyway, and so, yeah, I mean, the bottom line was like, oh, they needed like sign off from maybe like 18 out of 20 people to make this happen. I don't know what the number was. And I don't know, you know, they're nice guys. And so like, yeah, I don't know if they let me down easy or if they told me everybody thought it sucked. I have no idea. You know what I mean? But, you know, they basically said like, sorry, you know, we're only getting like half. We need like almost everybody, you know, we wish you all the best. You know what I mean? And they ended up buying another company and I hope they're doing great. And you know, I totally like them and all that, but.
And so, Dave, at this point, so 2017, 18 is when you decide, you open your mind to maybe selling and start wanting to get some at-bats with these prospective buyers. Now it's a few years later, you've had another at-bat. Are you, how are you thinking about the universe of potential buyers out there? Because there could be, you know, Searcher is just one sliver of type of entity that would buy. Like, did you think about private equity or competitor?
Yeah, I mean, look, I think I just, this is maybe like, I think about things in reverse order. Like, I just knew what I wanted to do and I didn't care how I ended up there. Okay. And so like, what I mean by that is like, what I wanted to do was to focus more efforts on my other venture. What I knew I wanted to do was to like, stop riding 2 horses with one ass, as somebody on my other team likes to say that I did. You know, Grade potential there are so many positive characteristics about it, but like there are also negative characteristics about it, which probably make it a not traditional search fund bot business. Like we are B2C, we do not have contractual recurring revenue, like all these things. Right. And so like that was wearing on me too. Cause like where I was like focusing over here, like I feel like Grade potential, if you take your eye off the ball, it probably can get away from you quicker than other businesses. I mean, I've only run one other business, so I can't really say, but you know, that's my inclination. And so I was also ready to stop having in my, like, I felt like Grade potential deserved more. I'm like, dude, there's some really cool crap that we can be doing. And I had all these ideas, but like, I could only do like a very small percentage of them across 2 companies. And I also knew that like if I started to take my eye off the ball too much, like although from an outside perspective, maybe it looked like we were doing well and we were, like I always knew like all of the weaknesses and it's not a house of cards, but like sometimes it felt like that. And so I just was like ready to move on. I wanted to be involved and I have heard like a lot of people roll equity and this and that. I probably ended up maybe rolling a bit more than average or something, but yeah, I was just ready to move on and I felt like Grade potential deserved more and that, you know, I was not, I was not doing it justice and like helping it achieve its full potential, not to be like coy.
Well, and one of the things that I'm getting at is just how you perceive these weird searcher people who keep showing up in your inbox, because because the searcher community is often up against private equity or,
Totally.
it's an unusual, especially for a business the size of yours. Why don't we quickly tell the audience, what did revenue look like? How big a business are we talking about?
I think by the time we sold, we were like just under 30 million. I think now we're probably about
just
35.
under 30 million. So that, the idea that one person or two freshly minted MBAs would come along and buy your business, I imagine would seem counterintuitive to you. It'd probably be a strategic competitor or a private equity fund, or maybe you just hadn't really, because you said you weren't.
I just was thinking about what my objectives were,
which was, you wanted to sell.
My objectives were to be able to ride, one horse with one ass. My objectives were to be, less stressed about letting this fall apart if I wasn't keeping my eye on the ball, and to have enough, like I had a mentor once tell me, oh yeah, David, like income's great, but like, balance sheet, that's where you have like financial peace. You know what I mean? And so, I was also ready, like, okay, if I could have like enough balance sheet, where I can just be like focusing on doing what I want to do because I want to do it and being creative and solving problems and like not like worrying about money. I wanted that, like what number that was, I wasn't exactly positive. I did want a quicker the reason that it was attractive was it was a quicker transition than longer. Okay. Mm-hmm. Like I talked to some private equity firms that were really good and I thought could be great, but like, it was like, hey, we want you for 5 years. You know what I'm saying? And I'm like, well, that is a long time, for two horses, you know what I mean? That I'm trying to stop doing, you know what I mean? And so, okay, well, maybe we could live with 3. And like, if you wanted it to be 2, be all these like super hardcore earn out scenarios and blah, blah, blah. And so like the number one reason, other than liking Jared, I like Jared, but like, and that matters. But other than that, it was just the idea that like, I probably could have a quicker handoff in a more incentive aligned way. Yeah, that was what was important to me. That searchers could offer that other companies couldn't. There's maybe some other strategics that like claimed I could be out quicker, but who knows?
Dave, tell us the bit about how that email almost didn't show up. You almost didn't read.
Yeah, so I do actually think Jared did email me a few times, and I was like, so at this point we had I had hired the investment banker. It was a lot of work, a lot more work than I anticipated. You know what I'm saying? Getting ready. And to me, it felt irritating. Like, fuck. You know what I mean? Like, what? Like this is what we're highlighting this. We're spending all the time on this. Like, you know what I mean? So I didn't think it was all the greatest oftentimes. But again, they were actually awesome. Turned out to be awesome. But took a long time. I felt like I was running 3 businesses now, for goodness sake, honestly. You know what I mean? But anyway, I can't remember your original
Jared's email.
Oh yeah, so I was probably getting other emails, but I was kind of ignoring them because I didn't feel like I was like ready for like my next at bat. And then Jared emailed me, I guess, a few times, and I think I told you I was like, I literally remember, like it was like Jared Lenner. I'm like, we almost could probably be cousins, probably. And I was like, I'm gonna delete this effing email. I'm sick of hearing from this guy. And I like literally like moved my mouse up like, and I was like about to push it, and I'm like, I'll respond to him. That's like literally how it happened. And so I just responded like, hey, hey man, thanks for checking in. We just hired an investment bank. If and when you're ready to like, be included in the Dog and Pony show, do you want to be, and he said yes. And so I thought I was just being polite. I totally did not think that it was going to continue on. But then, however many months later, when things were ready, I included him, and here we are.
Mm-hmm. And so, how many other people look seriously at the business given that Jared was
during this bank process?
Yeah, I mean, and Jared keeping his fingers and toes crossed.
Yeah,
like how many people was he competing with?
Oh gosh, I mean, they probably had a list of like 150 prospects. I probably had like Zooms with like 30 plus ballpark. You know what I mean? And then maybe we got like 8 IOIs. I'm just like ballparking this. I was bummed. Like there were some potential buyers that I thought would be really okay. Look, I'm a lead gen and sales guy at heart, like for this business particularly. And we are very like CAC to LTV kind of business, And so there were some like strategics that had like oodles and oodles of like existing customers that hopefully could be like rolled into our program. Like that would have been great. And some other businesses where like we could have been like a feature plugged into like platforms that already were servicing like 100 times more clients than we have. And if we could only get 5% of them, we would crazy X our business, you know what I mean? And so there were some really good ones like that, but for all different reasons, all but maybe like one or two of them weren't part of the IOI process. So I think we had like one or two strategics, and then like a few private equity firms, and then like I think there was maybe like honestly one other searcher that gave us like an IOI.
Okay,
but so I think we maybe got like 8 IOIs or something like that, and then it was basically that's basically.
Great. Jared, we're about to go back to you, but Dave, one last question. So you've told us about how your own like financial knowledge was kind of, you were self-taught. And so you didn't have the exact vocabulary that all the people with finance backgrounds do.
Yeah.
And you had a lot of what you did have about your business was kind of gut feel. Did you have a sense of like what your EBITDA was? So one thing searchers do is always like, Well, because sometimes owners just like, as long as I
called it profit. EBITDA bothers me. It's like, so, because like, I didn't borrow any money, you know what I mean? So like EBITDA and profit to me was like very, like the same. And I didn't like to have anything to depreciate or amortize or whatever. Right. So to me, like EBITDA was almost profit. And however, the way in which our cash flow works is unusual and maybe complicated. So that was the big wrinkle. But yeah, of course I knew what, on a cash basis, what our profit was. Yeah.
Yeah. Great. Jared, so you tell us about the process of actually going through the process with Great Potential.
Yeah. So 3 months of fingernail biting later, I get back the sim and, obviously participate in the process. And I'm thinking to myself, there's just no way that we're going to win here. But if I don't try, I am never going to sleep again for the rest of my life.
And Jared, with that in mind, how were you going to try to differentiate yourself when what you knew was a very competitive process?
Yeah, I asked Dave what was important to him, and I listened. Right. From very early on, it was clear
hopefully it was probably honest, which might be different than other people, but who knows? Yeah.
That's true. That's true. Yeah. Much to the chagrin of your great bankers. No kidding. Obviously, they were awesome. They're great guys. Titan is the name of the bank. Yeah. They're awesome. Matt Lavelle is the banker. He's great.
What did he want?
He wanted a quick transition, but an orderly one. He wanted, specifics as far as cash. And from very early on, it was extremely clear to us that Dave was extremely important in the business, right? Classic founder-led company. You guys have known Dave for, the length of this interview, and Will, I know, one conference, and he's a force of nature, right?
Right.
So the huge shoes to step into. And so we knew that we needed to keep him around, and so we rolled Dave for just under a quarter of the company, which, look, Dave, you always believed in the future of the company. You just didn't have the time or the energy to take it where it deserved to go and where it will be going. Knock on wood, obviously, right? And so I think that was really attractive to you. Something you didn't mention is that second bite of the apple was super important to you. And, I really remember there are 2 conversations that stand out to me throughout the deal process. The first was I flew out to San Francisco as part of the LOI process, as one of however many LOIs that were, or, IOIs that were selected to send LOIs if interested, and flew out to San Francisco. And, I literally brought the computer with me, and we're in, the hotel in San Francisco. And I turned the computer around. I said, Dave, here's the amount of money I have. Here's how much you make. I think you're going to keep growing because I think this company's awesome. Here's the laptop. Here's the model. Here's how much I can pay you. And he's like, yeah, that doesn't work. But what if we moved this from year 5 to year 1? And I was like, well, I can't do that. But what if we did it in years 2, 3, and 4? He's like, yeah, maybe we can do that. And so it really was collaborative in the end of, here's a structure that works for Dave and we can do without putting the company in an undue amount of financial pressure, right? Because we need the cash to grow and the company deserves the cash to grow. But I think just candor and honesty. And, the second conversation right before we signed the LOI, Dave, I'm sure you remember this, and it's one of our company values now. I picked up the phone, I called Dave, I said, Dave, I have asked no favors of you yet, right? I mean, we've had a lot of great conversations, and we've, we're really excited about this, and we're ready to sign an LOI, but, I need to ask a favor from you, and I'm not going to do that often. He says, well, yeah, what? Like, what's up, man? And I said, Dave, we're about to involve, beyond the bankers, accountants and lawyers and, tech due diligence people and when, not if, when your lawyers call you and say, Dave, these guys are being unreasonable, they're being jerks, I want you to say, okay, like, hang up, call me, I will stop what I'm doing and we will address it. We need to assume positive intent from each other if this is going to work out, right? And I'm not asking you to make me any promises about the deal, about, indemnity, about anything. I showed you exactly how much I can pay. I've been nothing but honest. And what I'm asking, I will show you that respect, but I'm asking you, like, can you do me that favor? And it saved the deal at least, Dave, 2 or 3 times. And, we operate that way, the two of us together, as well as a company. And I if you take one thing away from this conversation with the 3 of us, to anyone listening, have that conversation right before you sign an LOI. It was incredibly impactful.
Assume positive intent. Idea being that it's bound to get sticky in a negotiation, and lawyers in particular are bound to maybe make it a little bit more abrasive than it needs to be. So the 2 parties need to say to each other, let's assume that the other one is acting in good faith, has positive intentions, and if you ever feel weird, just call me directly.
Yeah, absolutely. Look, we're both signing an LOI because we want this to happen. We want this to work. So if your lawyers say he's being an unreasonable jerk, call me and we'll talk about it.
And like one small distinction that I would say is you said, well, we need to assume positive intent. Like, to me, like, I feel like the reason it works is because we were both choosing to assume positive intent. Okay.
Yeah.
And like, I make that distinction because like one of my philosophies with our team, I think we're like 125 people now or whatever, is like, I don't think anybody can make anybody do anything. You cannot, I don't believe you can make anybody do anything. You can make them pretend to do it. You can make them to give appearances that they're doing it, but like, I don't think you can actually make anybody do anything unless they are choosing to do it. And so like, that's my belief. Or maybe you can make them do something for a very short time or whatever. Okay. And so, I guess what I'm saying is like, it's not like these searchers out there need to like make their potential buyer assume positive intent. That's me like grabbing a throat. That's what I was doing. You know what I mean? But like what I'm trying to say is like you need to like, as you're getting to know these people, you can decide like, hey, can we in good faith both choose to have positive intent with this? And I feel like maybe I'm harping on something small, but like, I don't think it's small because like it's a choice, and like we knew each other well enough that I believed it was sincere, and I had sincere intentions of doing that. And I had enough experiences to know that like, yes, when these are highly complicated things with, lots of things or, lots of gravity at stake, that you could wonder if somebody was doing something in an underhanded manner or whatever. And so like choosing to assume that the person has positive intent, I think it's important to say that as opposed to like needing to make them have positive intent.
And so indeed it happens. There's a moment where what, Dave, your lawyer says, they're being jerks or something. What was the example of the call?
Maybe some of it was like how the rolled equity would or wouldn't get diluted, or I can't taxes, or I can't.
There was a moment where it was like lawyers aren't getting along. Jared invited me to call him, and just this moment, I'm going to call Jared.
I mean, I would have called him anyways if he didn't invite me to.
Okay.
But there were plenty of times where it's like, hey, Jared, like, dude, we got to figure this out. We got to figure out the spirit of this independent of what's being written down. We got to figure out what's the spirit, and can we navigate the spirit in a way that works for all the lawyers and such. Does that sound right to you, Jared?
Yeah. I think it was about, there were a couple things about indemnity here or there that are they're super important, right? really material about risk transfer, right? Because risk is never destroyed; it's only transferred, right? But I think by and large, it was like in the same way that Dave, you joke like, oh well, like, what if I deleted the email? I said, well, I would have just sent you another 20 emails. Don't worry about it, right? Like, I have no doubt you would have just kept calling me until I answered the phone. But no, look, jokes aside, I think it's just typical lawyer stuff about stuff that's super important. And the lawyers are great, and their job is to protect each side in any deal. But sometimes it feels like they forget that the goal is to get a deal done, not to argue and win points.
I think that last indemnity point, Jared, I think that was even after San Francisco, and I think maybe I was driving back from San Francisco, and I like pulled over to have like a very near the finish line Zoom over like a point that had become highly contentious, and it was like I was like in a parking lot, like with my kids in the back, like on Zoom on a phone with Jared and his lawyers and our lawyers and the bankers, blah blah blah, and like. We were like kind of yelling, and anyways. And so I get done. My wife is crying and she's like, I don't like those boys. That's like literally what she said, she loves Jared, but it's like, there's tough things to work out.
Yeah.
Yeah.
Well, and by setting the positive intent thing, it's also like, not only is it like, okay, call me if the lawyers make it sticky or whatever, but it's also like, we both want this to work. Even if things get heated, let's not give up.
Yeah, for sure.
It's kind of like a reminder to like push through those hard moments.
Yeah.
It's good. It's great. Dave, I've heard from you. I've heard from Jared just about like what mattered to you. So I don't want to beat this to death, but it is key to the story, A, and B, it's key to every search story, like understanding what the seller wants. And so is there anything more to say? You kind of wanted to move on. That was your motivation.
I wanted enough money that if everything went to hell, and I never made another dollar, that like our lifestyle wouldn't change for the rest of my life. You know what I mean? So like that was important to me. That's one thing that Jared thought was interesting is like, doing this deal, I probably got less cash up front than if I had done it in another way, but I basically kind of worked it all out. And I said, okay, can I make peace knowing that if on literally day 2, like after the close, like it went to it, cratered, like, well, can I live with that? And I decided that I could. Not that I don't want, the future earnings and such. But that was important to me. I just said like, okay, is it enough up front where like I'm not going to be like financially where I don't have to worry about finances, right? In the way that we live. And we don't live on a budget, but we don't live like insane. My dad said to me one time, he said, you can always live bigger, but not necessarily better. And so like that kind of stuck with me. And I wanted a transition that was like faster than slower. And I wanted to enjoy my day if I'm going to be interacting with these people like somewhat regularly. And so, those things were met for me. And so, my dad also says like, you can't ever get enough of what you don't really want. And so like what I'm trying to say is, like maybe I could have made more money somewhere else, but like I would still be the one turning the crank for the next 5 years. And so it's like, if I want to be out quicker than later, and if it's enough money, then what does more money do? It does nothing, right? Like if you have enough, then like more doesn't actually change anything. So anyways, I mean, I don't know if this makes sense or if I'm rambling.
No, it is great because there's a point where it's kind of like, as long as Jared or whoever offers to buy your business meets a certain threshold, beyond that, that's a checkbox, and after that, you're looking for these other softer
That's how
considerations.
I thought of it. I don't know how other people thought of it. I'm also thankful that I had other things going on, so I didn't feel like this was like my one score, and I was like, I'm not 70 years old where like, there's nothing else for me. You know what I'm saying? So I probably am a somewhat atypical seller. But for me, that's what I wanted.
Well, and that is why this is a interesting wrinkle in the story, Dave, is because one of the best practices in our world is that we buy from retiring sellers where there's a real incentive that they're leaving. Because from Jared's perspective and all of ours perspective, it's like, yeah, but why is Dave really trying to sell? He's clearly still very energetic. He's young. How old are you, Dave?
I'm 42.
42. I mean, he's got 20 years, and with your energy, maybe 40 years left in his career. If this business is so great, why is he trying to move on from it? And by the way, audience, you're not getting it as richly as we got it at UVA, but Dave you talked very openly about just you had grown somewhat tired of running this particular business. And you've kind of hinted at that here. But that can happen. How did you think about that, Jared, that he wasn't retiring and that he's just kind of saying it's just time. We're taught as buyers and searchers, Jared, to be very skeptical of that reason.
Yeah, it's a question that we had a lot, honestly.
Yeah.
I think ultimately we got comfortable with a few things. Number one, Dave had a why, right? He started a business in a non-competitive space, as he puts it, 2 horses, 1 ass, right? He, really had taken a pretty big step. I don't want to say step back, maybe a step sideways into 1 foot in, 1 foot out, right? And the fact that he was willing and interested and excited to roll and participate in the upside of the company and write, a seller note kind of around the size that we typically see in the search space. Yes, he was selling, but he had skin in the game far beyond the day zero or the day one, as it were, right? And so looked at it. I also, I joked about this at UVA. Dave is incapable of lying physically. I'm joking. I mean, and I do mean that as a compliment, Dave, right? Like, buy your business from someone like that, right? If they are willing to hide stuff, or they're the sort of person that would, like, they will hide it better than you will find it as a searcher. And, just the sort of person Dave gave us a lot of comfort. We got to know him. He's honest sometimes to a fault. I'd ask him like, hey, like, what do you think about this? And, through the deal process, he would say like, oh yeah, like I totally see why you think that, but it's actually this, and that's slightly worse for you, right? So, we really got to trust him, and again, like, I just kept looking at this business and said, if I don't buy this business, I'm never going to sleep, or if I don't at least try, I'm never going to sleep again for the rest of my life. We believed in it that much, and I also think that's a testament to Search Fund Accelerator, right? Like, there was every reason in the world not to do this deal, right? Like, Dave is too young to have this make any sense. The company's growing. It doesn't make any sense. It's a, D2C company, right? It doesn't have contractual recurring revenue, right? Like, you could go down the laundry list, and I walked into my weekly check-in with SFA, and I said, guys, I have never pounded the table, but we need to buy this company if we can.
So what was it that so turned you on, Jared? We know the weaknesses. What were the strengths?
Well, it had been growing and continues to grow, right? Like 20, 30% a year for 3 straight years post-COVID. The tailwinds behind the business were extremely strong, right? Like, I don't know if you have kids, nieces, nephews, other people with little ones in your life that are special or near and dear to you. But COVID was not a great experience. And so, like, to give you the elevator pitch, right? Like, we're in-person, in-home tutoring. We send a tutor shows up at your door, right? And our largest competitors they say tutoring in the comfort of your own home. What they mean is Zoom tutoring. So you have especially young person who fell behind because of Zoom school. And so the broad market solution is Zoom tutoring, right? It just didn't make sense. We felt really strongly about the preponderance of academic evidence showing that in-person education matters and that COVID-induced learning loss was real and persistent. And, clearly I'm not cheering for that, Will, right? Like, the kids are the most important part. And that's what's exciting to us, is that we got to help, somewhere between 20 and 30,000 young people be excited to go to school, again, in the last year. But every piece of evidence pointed to this business has been growing at an unbelievable clip. I would almost unbelievable clip, thankfully believable because we bought the company, obviously. And right, it's clear that if we did some of the things that David didn't have the excitement to do. The upside was huge. And I don't know about you, Will, but like my parents would have said, we're having hamburger instead of steak for dinner this week before they would have cut tutoring for me growing up. And I was a volunteer tutor on the south side of Chicago when I was at U Chicago. Like I understood the business. I understood the market. I understood, yes, we are D2C, but we are the last luxury someone's going to cut. Basically, it's like mortgage, like cheap dinner, tutoring, and then everything else. And so we felt really good that, yeah, it is D2C, but it is the last discretion that a parent is going to cut. Does that make sense, Will?
Yeah, it's great, Jared. And so what tutoring, what age group, what subjects? Is this K through 8, 9 through 12, all of it? What?
Yeah, everything. We'll tutor,
everything.
K through, we've tutored a master plumber exam, I think is the funny one that I've picked. Majority is K through 8 and vast majority is K through 12. We feel really good about that segment too, right? It's not the same thing to stick a third grader in front of a Zoom tutor and say, learn as a college student, right? And so the demographics were also favorable for us. And, if we can extend that lifetime value a little further out, that's really attractive. So a lot of interesting and exciting growth levers.
And Jared, return to flesh out a little bit about the skills that you were going to transfer into this. You said something earlier about your quantitative background and how the Google PPC arbitrage or something. So expand on that one.
Yeah,
where did you? Yeah.
Yeah, not exactly arbitrage, right? But like Dave had always flown the plane by gut and done it unbelievably well, right? But we also had kind of come to realize that the way we were bidding on digital customer acquisition, while it was clearly it ain't broke, Will, and so we didn't touch it for quite a while after I got in the chair. And as I started to learn and watch and understand, it became extremely clear to me, even pre-acquisition, but even clearer post-acquisition, that what we really needed to do was build something akin to a trading model for PPC advertising and start to be more data-driven, start to think about, how do we pay more, quote unquote, for the right customers who are higher value for whatever reason. Maybe it's the Octomom has 8 kids, right? Versus someone who only has 1 kid. Google absolutely knows that you Googled diapers by the pallet. That's probably a good tutoring, probably a good tutoring student, right? And so, obviously I'm being a little silly here, Will, but these are the sort of improvements and enhancements that I felt really confident with my data-driven and, trading background. We could take some really transferable skills, bring them in. I also, like I said, I read and continue to read a lot of CEO self-help books. Definitely do that. I've picked up a lot of skills from there. But, I think the core revenue driver being something I felt really, really confident in making substantially better within, 2 to 4 years of acquiring the company. That was something that you asked why, Jared, like, why'd you feel confident to walk in and pound the table and say, if we don't try to buy this, I'm never going to sleep. Like, hey, I think I can make the core way we get customers in the door way more efficient. That's a pretty good reason.
Yeah. Sure.
And as Jared likes to say, one of his analogies, and I have picked up many Jaredisms, which is cool. But is Jared's always like, "Oh, David, like you just want to pick lemons, but you're not squeezing them that good," which is true, for whatever analogy that may be.
What does that mean exactly? That you?
What it means to me is I just like trying to find new lead sources, such as new lemon fields, and like getting customers, but I am not like maximizing the value of each customer. And Jared's like, "Hey, look, Dave, like honestly, I feel like I'm like a very small business. I have like a very small business mindset in like a not so small business anymore, which has like pros and cons. But like, it's not that long ago that I was like literally walking around college campuses, like putting up flyers myself. Right. And so, Jared's like, hey, look, we're at the size now where if we can make this 3% better and this 2% better and blah, 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 like it makes a material difference where I struggled to focus on that. I just wanted to be like, where can I get new customers? You know what I mean? And that, so, not that Jared isn't looking to get new customers, but, like I think he is much better suited at trying to figure out like how to like extract more value from what we're already doing in addition to just getting new customers.
Well, it's also kind of the life cycle of a business where initially it is all about new customers, and later, once the business is established, it becomes more, or at least much more, about optimization. And Jared is, of course, doing both. As you said, new customer generation never stops. But now there's this great opportunity in many of these search stories, Dave, and yours is probably no different, for optimizing what you've already built.
Totally, for sure.
Jared, what about the obvious threat of AI, or supposed threat of AI? This seems like the anti-AI bet here, because you're basically betting on the human to human interaction.
Yeah, I mean, look,
is that it basically?
Yeah, I mean, to over summarize it, yes, right. I think to provide a little more detail, which clearly you're asking me to do here, Will. I think a couple of things. First, in-person matters, right? A preponderance of academic evidence shows it. If you think what I colloquially call ChatGPT tutor is not coming, you are dumb, a liar, or both, right? It will affect us, right? Perhaps the first cut at, oh gosh, I'm stuck at math, will be, what have you tried the AI tutor, right? Like, these LLMs are unbelievable. Google VO3 is unbelievable. It's not going to be long before someone smashes those two things together. Some of our biggest competitors are basically betting the entire company or the farm that they're going to be the one first to market for that. And that's going to be $1 billion company. And that's awesome, right? That's not who we are. And that's not what we're trying to compete on. We are in person, in home, and that human connection matters. And Will, I'm not going to ask you to believe me, right? I've taken meetings with companies that are funded by VCs you've heard of that have asked us, like, hey, like, how can we partner? Because AI can't teach a kid what to study. It can't say you're on the right track. It can't teach a kid study skills. It can't teach, emotion. It's okay that you're frustrated. Stay on it. Stay on the right track. It can't make sure that they're not on Roblox, right? Or Fortnite instead of doing their homework, right? And so I think the bet here is not that AI isn't coming. It's that in-person matters, and it's the 20% better that a human being is at tutoring your kid matters to parents, right? Again, is it coming? It's absolutely coming. Will it affect us? I bet, maybe the average hours purchased per customer goes down a little bit, or maybe, whatever one of these things may be, it of course it'll change things a little bit, but I guess I'd leave the listeners with a question. For those of you with kids, or those without, ask your friends with kids, or family members with kids. Do you want more or less screen time for your kids?
Mm-hmm. And Jared introduced me to the concept of like blue ocean, are we going to be a $1 billion company? Like, I don't know. Okay.
I wouldn't complain, to be clear, Dave.
I wouldn't complain. Okay, but even if we get like 1/10 of the way there, it doesn't suck for everybody, right? And so, this is a blue ocean type of setup, and like everything Jared said is true. And in addition, like, I just think like there's also always going to be preference. I mean, like what percentage of parents, like, all things being equal, even if it was, as efficacious and cheaper, but like, nope, they want a human being role model that their kid can feel good about seeing and actually enjoy, and not be like, watching YouTube on the other screen or whatever. I mean, so I think it's just preference too, is something.
And look, I think to build on that, right? Like, sometimes parents want a bad guy, right? Like, the tutor is making you do the homework, not me, right? Or so, there are tons of reasons that a parent may choose to have a human being come to their home, right? Like, we've seen unbelievable numbers of academic studies that it matters a lot.
Yep. Not
only from the learning side, right, which we talked about a couple minutes ago, but also from the emotional development side, right? Like, that age range that we're looking at, and look, the dollars are great, and I'm not going to say that we're not excited about them, because of course we are, right? Like, no one runs a search fund because they want to be a nonprofit. But I think, to me, the most exciting thing is the mission, which is helping as many kids as we possibly can. and the dollars will take care of themselves.
And so, Jared, now that you are running the business, why don't you give the audience the elevator pitch of what in 2025 Grade Potential does?
Yeah, so we are Grade Potential Tutoring. To the best we can tell, we're the biggest company in the country that will send a tutor to your house, right? We are currently in 65 major U.S. metros across, I think, 40 states at this point. And we've helped 20 to 25,000 students be excited to go back to school in the past 12 months. We are growing and tutor everything from K through 12, all the way up to a master plumber exam. So if any aspiring plumbers out there. But look, jokes aside, we are, I think that's what differentiates us is the human element and the in-person, in-home element.
Great. And I noticed the second time I've heard you say getting students excited to go back to school. That's an interesting way to put the value prop. Say more about why that language.
Yeah. I think a lot of times parents call us, right? Like, my kid failed the test, or, my kid, it was their turn to read in class and they mispronounced a word and now they're not confident, or, one of the kids in class has made fun of them and they're just not excited to go to school, and it breaks my heart, right? Of course, performance on a test matters, but at the end of the day, right, like, what parents really want, like, they don't care about the B or the A or the C. What they care about is that their kid is excited to go to school, that they are excited about their future, and they feel like they are building toward the future they want for their kid. And so to me, if we help a kid be excited to go back to school or be excited to go to school again, the grades are going to take care of themselves. Not to say that we don't have unbelievably high quality tutors who do a great job, in instructing students and helping them raise test scores. But, I don't think of us as a company that does that. I think of us as a company that helps students be excited to go to school again.
Boy, I love that. It's subtle, but that's a really deeper kind of why or value proposition. Really, really nice. And by the way, Dave, congratulations. I mean, a $30 million business top line. I mean,
Thanks.
that's a lot of revenue. And I feel like I have a really good finger on the pulse for that, because I've done so many interviews and understand, like, the tiers of getting to the first million and then to 5 and then to 10 and then beyond. I mean, you get into more and more elite strata there. And I'd say 30 million is pretty elite. Yeah.
Thanks, man. Appreciate it.
Does it feel that way?
Just a harder kick in the nuts every day, man. Yeah. No, I'm kidding. I mean, like, it's, sometimes, it's like, it's hard not to see past just whatever challenges you're facing. But then, like, and I wasn't like, I like, looking back, I always tell myself I want to, like, more like celebrate the wins and, like, be proud of where we come from. And it's like, I do want that, but it's sometimes hard to do that, like, when you're, like, in the mix, but maybe similar to what I said at Darden is, like, like, when I look back over a, like, longer period of time, the aggregate is like, damn, that's amazing. Like, or like, I remember, there's all these, like, poignant, like, memories of, like, shifts in the business. And like, I remember, some big shifts that we made and, like, kind of strategizing them, or, like, on a super long trip back, driving somewhere with my wife, and I'm like, pull out a notepad, you know what I mean? And I would just like, I had some new way of doing things, and, when she would, like, help me, like, flush them out and whatever. And, these are, like, fundamental shifts that when you look back over the course of a couple years, like, damn, like, we actually did that. Like, maybe not exactly, but we, like, kind of did that close, and that's super awesome. But, like, so I feel good about that. But, like, in my personal day-to-day experience usually was, I just always felt, I say this to our team too, like, you solve a problem, you just bump up against the next higher order problem. Great, we solved that problem. Oh, we're getting fucked here. Now we're getting, so it's like, I never felt like, fantastic, we're cruising now. It's just like, you just immediately, or I always felt that I immediately just was now confronted with like the next higher order problem, which is better to have than the one before it, but it is still now the problem that you're working on.
Well, Dave, let me press you on exactly that. That's such a good, I'm so glad you said that, because when that wire hits your bank account when you sell, that shouldn't that be one of the very few moments in your life where in fact you can just be like, wow, there isn't another problem waiting ahead of me. Yes, you rolled equity. Yes, you're going to be involved, but really it's Jared's problem now. And you just made millions of dollars. That would have been the moment to be like, wow, I really looking around. Now I guess you were right into your next business. And so you're worried about that one. But that's why selling is so magical and becoming rich is so magical. We are told. I'm serious.
Thanks. People would ask me, when did you feel like you were making it? I'm like, I'll fucking let you know if and when. Yeah. I mean, like, okay, like people would ask me that question, but, gosh, I feel like I'm like doing like a humble brag to say that, I had a lot of those feelings. But like, and Jared knows this, and Jared has like, I don't want to say talked me off the ledge many times, but like I felt so much responsibility for like this to go well for Jared, that like, I did have a lot of those feelings you're talking about, like from dollars in the bank, from balance sheet, from straight up, financial side. But like, and I said this at Darden too, when Jared says like, oh, it's like it's scary to like PG. Like to me, it's more scary that other people's money are relying on this. Like to me, that gives me much more anxiety. You know what I mean? That like now other people have to gain or lose, because in the past it was like just me and my family, right? And like if I fucked up, I would be mad at myself, and that would be that. You know what I mean? But like now that like other people's money and other people's futures were involved, like that like really feels not heavy in a bad way, but like feels like a lot of gravity with that. And like I felt and still feel like significant responsibility to make sure I was giving Jared like the most solid foundation I could, and that if anything happened, I wouldn't have to ask myself like if I gave them something crappy. You know what I mean? And so I partially felt that, but I also I partially felt a relief, but I also partially very much felt this like different new type of responsibility.
I don't know if you know how well you know our world now, but seller fraud is the top reason why search acquisitions go sideways or south. And you might say, well, obviously, but actually to me, it's quite surprising that there are so many people who are willing to take millions of dollars from somebody knowing that they're that this person is set up to fail. And I'm not saying it's commonplace, but when you look at the reasons that search acquisitions go south, that's the number one reason.
Yeah, it's interesting. I hear that and like, what is fraud? What is fraud, right? Because like to me, it's like a continuum. Because it's like if there is
now get scared, Jared. Now get scared.
No. I'm back to biting my nails. No, I'm joking.
No.
Dave,
like what I'm trying to say is like, I am maybe there is somebody that is literally lying in like every step of the way, actively defrauding. I'm sure that happens. I mean, you would like to think that a savvy person would like not be, would not have that gloss over them. But also I am sure there are like white lie fraud and like omissions and like, well, they didn't ask me about this, so I'm not going to say anything. You know what I mean? So like I don't know like where these fall into. But like I can see the second type happening because, if there's a lot of money at stake and blah, 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 I can see people, behaving like less than optimally. And then maybe after the fact, it looks like overt fraud. I don't know. You know what I mean? So
it's actually a good point because there is part of this that's like, if you're as the seller of a business, of course you want to present your business in the best light. So where is the line between presenting your business in the best light and being dishonest or even fraudulent. And that's probably a harder question than we buyers give sellers credit for. Jared, what do you think?
I think first we have found zero fraud, less than zero fraud. No, I'm joking.
Yeah.
I mean, I am serious. We didn't buy your business from someone incapable of lying, who's a really good person, who cares almost more about whether you succeed than how much money is at the table when they close.
Yeah. That was beautiful, Dave.
Jokes aside, right? Like, I think the temptation to lie is very big when, every dollar is multiplied by 4 to 6 or 8 or 10 if you're looking at a SaaS deal potentially, right? I think, you hear stories about people who, there's a related party transaction that, the seller didn't realize that they were supposed to say, or didn't know that that's what that meant, or, I thought I was doing my taxes the right way, but I wasn't, right? Like, I think Dave's point of a continuum is well taken, where it's like the pressure is high, I can only imagine, for a seller, right? The stakes are magnified, and this is a seller's first time. These are not folks who come from a private equity background who understand what is required, what is a material non-disclosure, right? So like, I'm not shocked to hear that it's common. I've heard, a couple stories of like outright actual lying from people who knew better. But, most of my friends who've ended up, acquiring a company and, finding out, oh gosh, this isn't what I thought it was or what I thought you said it was. It's usually one of those other ones where it's a misunderstanding or a miscommunication, or, hey, I thought that, or we thought the APA meant this and you thought it meant that. As opposed to outright, fabrication or,
Agreed.
misleading.
Yeah. Now, I don't know if you were trying to lead me into that. I did have, at close. So I had always told my wife, so I wrestled growing up and am involved in some businesses that are related to wrestling too. And I had always told my wife, I wish in business that there was a moment where I could like fall on my knees and cry the way like wrestlers do if they're like win the NCAA tournament or Olympics or whatever. My wife got me like a UFC belt there that I didn't know about that she like gave to me at Goes, which is pretty cool.
Dave's wife
so
is
sweet.
awesome. She also got me a literal baton that says "Great Potential" on it. For those of you, that's upside down. For those of you on YouTube,
that's great.
There's an actual literal baton here with "Great Potential," the logo, and "Go Jared" on the back.
Amazing.
So our quote unquote closing picture. I was living in a sad Airbnb in Nevada City, California, learning from Dave, the closing picture is of me shaking hands with Dave, passing the baton.
Passing the baton.
I was just say,
and Dave wearing his belt.
Also, my wife got Jared's wife a baton too, because it's as much a kick in the nuts for her, however, whatever that's supposed to mean.
Clearly, obviously metaphorical ones,
metaphorical.
but yes.
Yeah.
Well, your wife is right to celebrate that, Dave, as a fall on your knees victory moment, because you're right that so much of business is gradual, small, medium-sized wins.
Yeah.
But you're not going to have a more definitive, victory moment in business than the signing of a closing on a business that you built from nothing. So
it was a little anticlimactic. It was like 6 a.m. Pacific, and we're all on a Zoom. And it was like, yeah, you confirm. Cool, we're done. It was like 10 seconds. I felt like, I'm like, that's that. Okay, have a good day.
Dave felt like he got the short end of the stick, right? He's like, well, that's it. It was just like a 5-minute call. Like, is there supposed to be more pomp and circumstance?
Well, as I understand it, the real moment is not the signatures, Dave. It's the reloading your bank account number until the wire hits. Did you do that? Did you do that?
I mean, I suppose, like metaphorically, you know what I'm saying? But,
okay.
But yeah. Anyways, man, it was great. It was awesome. And I'm super thankful and all that.
Good.
But anyway.
Well, guys, let's bring it home here, because we haven't even heard about Jared's leadership, and there is I think there's a few minutes that we want to spend on that. So thank you for all the color on what the actual closing is like from both your perspectives and your wife's perspectives. Let's not forget.
We have a friend that she would complain, and she would post. I mean, I'm not like a social media guy, but she would be like, like, to me also, it's like a humble brag, like, oh, like CEO wife life. Oh, you know what I mean? And so like, I'm sure if they hear that, maybe they'll know I'm like making fun of them. But anyways, it's, you know, it's real. Woe is me.
When did you guys close?
August of 2024. So first email was December of 23.
No.
We were not
Wait.
No, excuse me. December of 24.
23 is when we met in San Francisco.
Oh, you're right.
Yeah.
So first email would have been August of 23. We met in San Francisco December, signed the LOI in March, closed in August. Obviously, substantially longer than a typical deal will. You know, we have tens of thousands of customers and millions of transactions to diligence. We have to do cohort analysis and, you know, all sorts of different stuff. So extended timeline. You know, Dave, I was literally sending Gantt charts of like, we are here, this many weeks to go. And I was actually pretty close to a guesstimated closing date. Although the bankers were like, how is it going to take you that long? I'm like, guys, I do not have a team of analysts. It is Jared and SFA and like Trevor Liu, you know, the VP at SFA is awesome. And he's brilliant and was incredibly helpful through the process. But, you know, definitely a longer cycle than typical. We closed in August of 24. That one I know is true. So obviously super exciting, and it's been fun to lead.
I wasn't rushing it either in the sense of like, we were like doing super well and blah, blah. So I wasn't like rushing it, but sorry, what's up, Will?
Well, what about Jared's kind of transparency and showing you where you are in the process? Was that something that helped you feel confident that it was going to close, or was that never really a question? Because that,
I mean,
strikes me as a really helpful thing for you to reinforce the fact this is going to happen. This is going to happen.
I mean, I didn't feel like Jared was dragging his feet, so I mean, he did show me that, but I didn't feel like he was dragging his feet,
okay.
and I wasn't rushing it either. I wasn't rushing it either. So I wasn't like, like I just wanted to get it right. You know what I mean? So
great.
Like, yeah, took what it took.
Great, Jared. So you can tell us now in front of Dave, is the business that you thought you bought the business you bought?
No, it's better. No, seriously though, it's an unbelievable business. The people that, you know, I inherited with the company are unbelievable. You know, buy a great business from a great person who tells you the truth and has done a really good job of hiring really good people. If you do that, your job is a lot easier running a company. Obviously, you know, well, thanks, Jared. Like that's great advice. That's the hard part, obviously, right? But you know, that's made my life super, super, I don't want to say easy because this is a very difficult job, as I'm sure you and anyone who's been on this, been on the pod has can speak to. But you know, we've had the breathing room to hire a CFO, a COO, a data engineer, you know, head of technology. We have some tremendously smart and talented people. We've done a little bit of, you know, relabeling titles, but broadly, the business has A, continued to perform beautifully, and B, you know, the people that I've inherited have been awesome.
Dave, one of the things that searchers intend to do when they buy a business is to change that business, of course, right? That's why they're buying it. And that can be uncomfortable for the sellers to see their, you know, baby changed or just to see decisions made that they might not agree with. Jared's now 13 months in. You're on the board. You're involved, as Jared has made clear. Has there been any discomfort on your part in watching Jared do whatever Jared has done for these last 13 months?
I mean, there's been like uncomfortable things, but like, you know, that's no different than when I was running it. So, you know what I mean? So there hasn't been anything that Jared's done that I like disagree with or am uncomfortable with or wish he did differently. You know, as we talked about the other day, like there are some things that Jared did that I don't have like the temperament and skill set to do. So I didn't like watching them happen, but I also understood like why it was important and the value of them, but it wasn't like a party.
Like what do you mean?
Oh, like as Jared called it, like de-risking. Like, you know what I mean? Like the truth is like, maybe you could say I got lucky that like, I mean, we had plenty of like things that blew up in my face, but like nothing that was bad enough to like, you know, be an existential threat or something like that. Right. But, you know, there maybe were a few of those that Jared knew of. This wasn't like he came in and it was like, oh, by the way, like, you know what I mean? So, but it's like, it's very clear, like, okay, here's an area of risk that I haven't really dealt with. Like, here's an area of risk that I haven't really dealt with. Here's another area. And then David, there's also, here's another area of risk that you haven't even considered. I'm like, that's true. You know what I mean? Okay. And so, for the first 6 months, Jared spent a lot of time, like defusing any potential bombs, which is valuable. And I appreciate him doing it because I always knew that maybe some of them were there, but it's like, you can only do like however many things you can do, and you got to decide what's worth it and blah, blah. And so, so Jared did all those things. But after a while, I'm like, dude, we're not doing anything cool. You know what I mean? Like, like I'm teasing him, like, you know what I mean? But like, so I'm glad he did that. So yeah. And then there were, some team member stuff, that wasn't like amazingly glorious, but unfortunately I dealt with like less than glorious team member things myself too. Right. So it's like,
yeah,
there's nothing, I think Jared's doing a great job. And I mean that not just from a financial standpoint, but from a people standpoint. And I think Jared, look, I probably was like one of, probably my harshest critic. Maybe Jared is too. And like, it did feel good when people that I respected and admired told me like, wow, Dave, like you're doing a great job, blah, blah, like, okay, thanks. Cause it feels like I'm hanging on for dear life sometimes, and so, yeah, Jared is doing a great job. Maybe he feels like he's hanging on for dear life or not. I don't know. But no, I haven't disagreed with anything. I mean, sometimes it's just not my style or preference, but like, that's also why Jared's here. And, hopefully 1 + 1 is more than 2. And hopefully like, like it's probably good that Jared and I have like not perfectly overlapping skill sets, because like then I wouldn't be very beneficial, right? And so I'd like to think I can add some value still, and that Jared adds value in ways that I wasn't able to, and so that's great.
Yeah, look, I think obviously you guys can all tell Dave is my biggest cheerleader. Beyond the fact that he is the largest individual equity holder in the in the company, right? Like, he truly cares about me and the success of the company and our people, which is incredible. Buy your company from someone like Dave, if I haven't said it enough. Like the stuff he's talking about, like employee handbook, buying brand new computers for the whole company, like hiring a world-class cybersecurity firm to get us, fully up to where we want and need and deserve to be. These sort of things. Hiring a CFO, I'll never forget. One of the hard days. Dave had a bookkeeper who's awesome, super nice person, like incredibly kind, and so through the diligence process it was like, great, like, he's a part-time bookkeeper, she has her own little firm and does. And so I asked, so great, like we have investors, like GAAP and accrual accounting is not optional. Like we have this methodology. Do you understand it? Are you comfortable? Yes, absolutely. Great. And so on day, 33, we go to close the books. And I'm like, okay, great. Like, we're going to sit down and go through the revenue deferral schedule together. Are you ready? And literally she goes, I quit that day. So,
wow.
There's unexpected stuff along the way. And obviously, my first call was to SFA. I was like, guys, like, this just happened. Like, clearly I'm not going to, and the second call was to the lender. And I was like, I'm so sorry. Like, clearly we didn't see this coming, and we have, obviously you have some time to get your feet under you for reporting and all that, but super transparent. We were able to, and had Power BI dashboards, and I could tell the business was performing beautifully. So I wasn't worried about, are we making money? But I didn't know how much for probably the first 60 or 90 days. So, look, I think have a 100-day plan and know that there's 0% chance you're going to do it in the order you think you will. But the absence of a plan is a plan. And so, definitely have a plan for what you're going to do, but know that things are going to happen. Like your bookkeeper who swears up, down, left, right, and center that, they're comfortable and excited to do accrual and GAAP, quitting the literal morning that they were supposed to start on that.
Wow, Jared, that would have been a scary one.
But she's worked with our family for a long time, and she called me up. I was on vacation. She's like, so Jared probably will be calling you. Yeah. I'm like, okay.
And to be clear, no hard feelings. Like, she's so nice. She's a wonderful woman.
Yeah.
I just wish that, like, I had known that, 30, 45 days prior.
Sure.
Could have planned around a little better.
The SFA model of working with searchers, Jared, are they going to continue to be involved operationally? Are they, how much support do you get at this part of the journey?
Yeah, look, the support's tremendous. I would say have a great board. It really helps a lot. So obviously Dave is on the board. We have an outside board member named Brian Kibbe. He's amazing, like 15 out of 10. I consider Dave and Brian friends. I mean, I consider Tim, Matt, and Sean friends too. But, look, I look at them as board plus, right? Like they don't meddle. They're not interested to, micromanage at all. I have a weekly call because I choose to. And, they've said, hey, like we can take that down. Like you're doing really well. I'm like, no, like I really enjoy bouncing ideas off you guys and saying, hey, like, what do you think? What else has worked? SFA has Slack channels with every single CEO. So if I have a problem I'm facing, I can Slack and ask a CEO who's been operating, right? And ask a group if I don't know who has faced that problem before. So the level of support post-close is as good or better than pre-close, right? And I don't want to say it is the level of involvement you choose, because obviously, like this is a single capital source investment. Like it's a concentrated bet. And the flip side of that is, of course, they're gonna, provide more support and be closer with you as a CEO. I look at that as a giant benefit. Once a year, we all go back to New Orleans or Denver. This past year, we had a crawfish boil in the new office. It was a heck of a lot of fun. And I will take any excuse I can to go to New Orleans.
Amazing, guys. Any last thoughts? Anything that we didn't hit that you wanted to? Or shall I close this out?
Look, as I joked previously with you, right? Like longtime listener, first time caller. Been a big fan for a long time. It feels a little bit like I'm meeting a celebrity here today, Will. But look, it's been a blast, and it's been a blast.
The only thing I might add is, and I would assume that this is kind of like broached, but like it ain't easy, right, Jared? You know what I mean? And so like, I mean, I feel like that's kind of what you're implying when you say like, oh, the closing of the business is just a starting line. I feel like that's kind of what you're implying. But like, I've been involved in different business groups and blah, blah, which have been awesome. And like, I don't know a single business owner or somebody running it that it isn't like a very significant struggle most of the time. Yeah, I mean, that's my personal experience. Maybe I have a biased sample set, you know what I mean? But that's just my experience. It's like, hey, like you, like just. So I had a wrestling coach in college, and he was a world champ, silver medalist in the Olympics, and he's like, yeah, his little kid, he's like, yeah, he's starting to get into wrestling. He's thinking about wanting to wrestle, and he's like, it is a lot. He's like, he basically was saying like, I don't know if I want to encourage him because it is a long journey. He like looked at me and said that. He's like, it is a long journey, and like, I feel like I think about that a lot too, because I feel like that's probably this. And like, if people like fully understood what they are getting themselves into, like would as many people do it? I don't know. Like, we'll see what Jared thinks, in a few years. But I think that's, you just gotta be like, however tough you think it is, it's probably going to be tougher. I mean, like, I'm sure there are exceptions, but what do you think, Jared?
No, look, I think that's true. I think that's true through the search process where it's like, hey, celebrate the little wins along the way, because it's a binary process where if you do it right, you buy one company, right? So like 2 years of no, you're dumb. You could never buy me. I make $100,000. For one, yes. Like if you're not celebrating this, the IOIs and the LOIs and, all of the steps along the way, it's really arduous. And look, running a company is really difficult. There are nights that I toss and turn and don't sleep, but is it worth it? Yeah, it's awesome. Right. I mean, I'm biased, obviously. Like we're doing really well. We're growing. We're a company that helps kids be excited to go to school again. Right. Like it's pretty easy to be pumped about that mission. Right. But it's really hard to run a company. It's worth it. It's awesome. It is everything I dreamed it would be and more. And the and more is both the good and the bad. Right. But on the balance, it's the best decision I ever made to search.
Great. Let's end it there, guys. Jared Lenner
Awesome.
and Dave Serwitz, thank you very much for coming on. Thanks for sharing. Dave, especially you. It's really hard for us to get sellers in our community on stage, so we appreciate you doing it today at Darden, et cetera. Really great to get your perspective, Jared,
man, I'm
of
having
course.
fun with it. That's my new goal. I just want to try to have more fun, enjoy my days. You know what I mean? So I'm happy to be here. I'm enjoying it. Thank you.
Good stuff. Thank you, gentlemen. Hope you enjoyed that interview. Don't forget to subscribe to the Acquiring Minds newsletter. We send an email for every episode with an introduction to the interview, a link to the video version on YouTube, and soon, key takeaways, numbers, and more essentials from the interview for those of you who don't have time to listen or watch it. Subscribe at acquiringminds.co. You'll also find all our webinars there on the website, both those we have coming up and recordings of past webinars. At this point, there are over 30 webinar recordings, a wealth of information on all the technical nitty-gritty of buying a business. acquiringminds.co.